China has just dropped a trade bombshell on Canada. Starting August 14, 2025, Beijing is imposing a massive 75.8% anti-dumping tariff on Canadian canola seed imports. The move threatens to shut Canada's farmers out of their most important export market and has already sent global canola prices into free fall. The preliminary duty, effective immediately, comes after a year-long Chinese investigation into Canadian canola. Beijing claims Canadian farmers receive subsidies and unfair advantages. But the bigger story is geopolitics. This is payback for Canada's tariffs on Chinese electric vehicles last year, part of a growing tit-for-tat trade war between the two countries. The impact was swift. Within days, canola futures plunged 6.5%, hitting a 4-month low around $650 per ton. European rapeseed markets also dropped 1.5%. Proving just how global this shockwave really is. For farmers in Western Canada, the tariff has slashed farm gate prices by about $3 per bushel. That's potential losses of $120 to $180 per acre. The Canola Council of Canada and the Canadian Canola Growers Association called the tariff devastating and are urging Ottawa to step in with urgent diplomatic talks. With the Chinese market valued at $5 billion in 2024, industry leaders warn the fallout could cripple farm incomes. China's Ministry of Commerce insists the tariff is justified, claiming Canadian canola is being dumped at unfairly low prices. The final ruling is expected in September 2025, but Beijing could extend the investigation another 6 months. That means the tariff could be permanent or adjusted, depending on the outcome. With China effectively shutting its doors, Canada is left scrambling. The United States remains a lifeline, buying record amounts of Canadian canola oil and meal last year, worth $7.7 billion. But even the U.S. market can't replace China's demand. Meanwhile, countries like Australia, Ukraine, and South America could step in to fill the gap, reshaping global oilseed markets. To make matters worse, Canada is expecting a nearly 13% jump in canola production this season, with stocks set to double. More supply plus fewer buyers equals more downward pressure on prices. Analysts say volatility will remain high as global buyers shift to alternatives like soyoil and rapeseed. While the U.S. is absorbing some of the shock, Canadian farmers know they can't rely on just two markets anymore. The government is now racing to diversify exports toward Europe, Japan, and Southeast Asia. But until trade relations stabilize, uncertainty will continue to hang over Canada's most important crop. This is more than just a tariff, it's a turning point in global agriculture and Canada-China relations. Farmers, traders, and governments are now locked in a high-stakes game, and the outcome could reshape the global canola industry for years to come.